back. You're watching IndianOpen right here on BloombergQuint Live. Across Asia, you've got some amount of green in today's session. Remember, there were positive economic data points in terms of the US jobs number that excited the markets out there too. Indices across Asia are trading with gains of anywhere between 0.2% to closer to 0.5% for Japan 225, which is now up 107 points. SGX Nifty, though, extremely flat. No major cues coming in from there. 11,952. Good morning, Neeraj. Last week was a little bit of a setback, a disappointment of sorts, but obviously, you would expect some bit of a give back after a record week.
Yeah, and by the way, Asia has picked up a bit of steep, but Devina, the interesting thing to ponder would be, does the market take any heart from what the FM said about tinkering with the personal tax cut? Because that's one more thing, and maybe the expectations whether it will happen in the budget session, but you never know. If the announcement or the talks of possibilities made so soon, maybe the market expects something sooner.
Yeah, but let's see what the reaction to that would be. We'll have to wait and watch as to what these banks also do, because I think the primary culprit of Friday's session was the banks. SBI was down 5%, so that was a big setback. And Darshan pointed out that there is some talks of a weaker bank getting merged into SBI, which may not all go too well, at least from a short-term standpoint. But all of that and more will be discussed with our experts as well, and it will be important to get their comments too. But also, let's take a look at what's been happening in the derivative space. Agam Vakil is standing by with the update on what the setup looks like today. Agam, good morning.
Good morning, Devina. Well, you guys spoke about banks, and that's what is going to be in focus today. But I'm going to start off with the Nifty futures. And, we did see about 2% increase in open interest towards shorts. This is after a bout of longs unwinding. And as you can see, the Nifty came off by around 1%. But the Nifty banking futures, that's where we have seen a lot of unwinding. Open interest down 9%, even as the index comes off by around 1.2%. So watch out for this one. Moving on, in terms of your open interest change, what we're looking at is a little more writing around the higher levels. So that's 12,000, 12,100, 12,200 calls, which means there will be some sort of resistance in the near term. Do remember we closed below 12,000. And on the lower end, there's a lot of writing around the 11,500 put, which means that traders perhaps are getting ready to, acknowledge maybe that the Nifty is ready to hang around between 11,500 and 12,000. That brings me to your maximum open interest, 11,500 and 12,000 puts competing for maximum open interest in terms of put options on the higher end. It's fairly evenly poised. Around 12,100, 12,200 is where we could see some amount of resistance in the near term. And moving on to your wicks, surprisingly falling despite the fact that we saw volatility come through below the mark of 14. The Nifty put call ratio also came off to around 1.25 against 1.5. And in terms of stocks, that's where we've seen a lot of interesting moves. So we have a whole host of banking and non-banking financial companies which are buzzing, which are seeing a lot of accumulation in open interest. But for those like RBL Bank, Bank of Baroda, and L&T Finance Holding, which has actually seen unwinding coming through, or rather shorts coming through. And Tata Elxsi, of course, saw a little bit of unwinding. This is after a very strong up move the day before, the session before that. Colgate-Palmolive, Vodafone, Idea, and Mindtree, among others, which is seeing unwinding. Mixed day of trade, something that we're expecting to pan out today as well.
Let's wait and watch. Thanks a lot for that, Agam. Yeah, the interesting one was Colgate. It's corrected so much of late that some bit of short covering that we saw, or profit booking, whichever way it was, and the stock rose about 2.5% and stayed steady despite the markets coming off. And I wondered, Devina, if the next few days might see some of the personal consumption-based names inching up a bit, because if there is a tinkering with the tax rates and assuming that the lowest slab gets the maximum benefit, those benefits the markets would perceive are not large enough for them to be able to buy a house or a car, but they are large enough to upgrade the consumption patterns.
Discretionary spending will likely also go up in a way. I don't know about spending on cars, but...
Yeah, that's what I'm saying. So maybe, the market, in my wisdom, I would probably think, and I don't know how you think about it, but, as somebody said, that people, when these things happen, move up from a cold date to a Colgate. Yeah. They move up from a non-branded shirt to a branded shirt. And that's the kind of consumption patterns that have happened. Of course, depends on when the tax rate comes, what's the quantum, what's the nature. We don't want to guess anything. But maybe that's the thing that the markets might want to focus on.
I also want to look at Kotak Mahindra Bank because, while the rest of the banking names were a bit soft on Friday's session, this was the only one that actually stood out. 1.5% gains for Kotak Mahindra Bank on Friday's session, and that's not just been a matter of one day. It's the last 6 or 7 trading sessions where the stock on almost a daily basis has made a gradual climb northwards. So you've seen how it's actually moved. 1674 by Friday session. There are some street talks about the possibility of something happening at the promoter level, but we'll have to wait and watch to see what this does.
Divergent views compared to the rest of the large quality banking names for sure. But let's talk about all of that and more with Avinash Gorakshakar. He's head of research at Joindre Capital Services, joins us on the show. Avinash, good afternoon, good morning. Thanks much for joining in. Do you expect that the markets would be enthused by this whole talk of personal tax cut? And should something happen, or whenever it happens, what pockets might benefit the most, you reckon?
I think clearly, Neeraj, after the corporate tax cut, I think the personal tax slabs are the next, agenda which the government has already made it clear. I think hopefully, we could see these announcements coming in the budget. And my sense is, I think, smaller ticket items, especially in the FMCG space, on the consumer durable side, typically these are items which typically, the masses and I mean the retail kind of, audience definitely goes and buys out. So I would believe that it's going to be definitely a big sentiment booster for the markets as a whole, because clearly after the corporate tax cuts, it actually gives a lot of spending power within, both the rural as well as the urban classes, and that could definitely be seen as a positive signal. I think, depending on what kind of cuts come in, but the markets would definitely feel elated that the government is definitely looking at putting more money in the hands of the customers, which finally would eventually drive demand, maybe not immediately, but maybe over the next, say, 2 to 3 quarters.
Okay. Let's talk about some of these brokerages and the kind of downgrades that are coming in on some of these SL group stocks. Z for one saw it, now you have Dish TV as well. Does that raise a lot of alarm bells for investors who are already invested into both these stocks to move out now?
I think clearly, financials have deteriorated, and my sense is it could possibly, be seen now in the third quarter numbers. So I think there could be some more price damage left out. As far as Dish TV is concerned, I think CARE has already given a downgrade, and my sense is that if there is no debt rescheduling, or maybe the management does not pump in more capital, it could possibly suffer more. So my sense is, I think it's better that investors avoid these stocks, and if at all anybody is holding these stocks, I think any rise should be used as an exit. So I don't think you're going to see any improvement in the operating metrics for both these companies.
Okay, the point being, what could happen to some of the bankers out here? Avinash, Friday session saw not only Dish but RBL Bank correct as well. Do you think because of this downgrade, these facilities or these stocks could remain under pressure as well today?
I think clearly, obviously this is going to be negative for bankers, and obviously, how debt is rescheduled and how their cash flows improve, Neeraj. So definitely, I think, I would believe that, at least in the near term, we could definitely see a little bit of weakness here, because the markets could possibly be a little uncomfortable, considering that, if both these companies get into the NPA category, that actually adds to their, asset quality issue. So I wouldn't be surprised. Markets could definitely wait for some more clarity, but yes, in the near term, these would definitely remain weak.
Avinash, we just did a small piece. There's a Bloomberg News report on D-Mart selling, Radhakrishnan money looking to sell some stake, and maybe the company might issue some funds as well, or equity as well, as a part of the fundraise for its expansion plan, which will help the promoter bring down the stake. So the intent is well known. Maybe there is some technical pressure out here. My question is, for this business, if there is some technical pressure and the stock were to come down further over the course of the next couple of months, would you go out and buy it, or would you say that it's anyways an expensive stock, let's not tinker too much?
No, I think, Neeraj, here, I think clearly in terms of liquidity, there are many large funds who have actually not participated in the earlier IPO, and I think even on the secondary market, liquidity is extremely tight. So I think any liquidity which is offered now, my sense is the retail investors may not push out, may not go for this kind of offer, but the institutional, I think buyers are definitely there, and this QIP or maybe this dilution which the management is making could easily sail through. Typically, I think OFS normally comes at a discount of 7 to 8%. So I would believe that, despite the fact that valuations are expensive, I think the headroom for growth over the next, say, 2 to 3 years is quite quite solid and robust, and DMart has very strong operating metrics in terms of the cost management. So I would believe that if at all the stock corrects significantly, more than say 10 or 15 odd %, which is difficult, this would definitely be a kind of a longer term positional pick. I wouldn't be surprised that any decline would be obviously be used as a long term opportunity, although in the near term the stock definitely looks a pretty expensive stock.
Okay, let's see. Remember the peers too. The thing is, you can argue about the how expensive a stock is if the others are not that expensive. The peers too are not cheap. Trent, as we've said, is not a cheap stock. So Avinash Supermarts, Trent and those probably just trade at those valuations because of the nature of the business and the quality that they bring to the table. Anyways, we'll talk about more of such names as well. Let's try and go across to our research team to talk about some of the key news makers in the session today. And there is a brokerage note that has come in on the ceramic industry, so it'll be interesting to get some perspective there as well. Nikki and Yash join in for that. Good morning to both of you. Nikki, let's start off with you first, the stocks in news.
Yeah, I'm going to start off with rating downgrades first. Coming in on PC Jewelers by CRISIL, which is downgraded the bank facility, taking into consideration the instances of devolvement of letter of credit and overutilization of working capital requirements past 30 days. It also is reflected in the liquidity profile of the company on account of cash flow mismatch. So do keep an eye out on this one. Also, we have a rating downgrade coming in for Trivedi by Care Ratings on the bank facilities again. The rating has been revised after the company has defaulted on the payment of short-term loan due on November 28th. In terms of monthly production numbers, we have Goa carbon numbers. The numbers on the production side look to be pretty enough. 7 times growth out there, 7-fold growth out there. The number is around 1,54,013 million ton. Sorry, that's 15,413 million ton. And if you look at Maruti Suzuki, there is again a positive development out there in terms of the monthly update. The company's production has risen by as much as 4%, and this is the first rise in production that the company has noted after 8 to 9 straight months of output cuts. So do keep an eye out on this one. And last on the list, we're looking at Apoca now, where we have a negative development coming in on this counter. US Department of Commerce has preliminarily determined an anti-dumping duty of more than 2.5% on this on the company on quartz surface products. The company said that it's going to be taking legal action towards this, and it's very disappointed with this ruling, and has said that it has not engaged into any kind of dumping of quartz products in the US market as a whole.
Okay, a few stocks, small ones, but in focus for sure, as also some brokerage notes, Yash.
That's right. So Investec has come out with a report initiating coverage on the ceramic tile players. So they've come out and initiated with a buy recommendation on Kajaria Ceramics and a target price of 752 rupees. Sarah Sanitary Ware, again, they've initiated with a buy recommendation and a target price of 3,214. And lastly, Somani Ceramics, where they have recommended a buy rating and a target price of 297. Now they go about with their report explaining the difference between how the tile industry works with respect to the paint industry because of the different industry dynamics, as well as the pricing power, which is largely in the hands of the organized players when it comes to the paint industry versus the tile players. Going forward, branding and distribution, that would be the key aspect in terms of growth, where they see the evolution happening from the smaller retail centers to multi-brand outlets as well as exclusive showrooms. Extension into newer product categories such as the bathware, water heater, as well as lighting, that should also optimize their distribution network and help them gain market share from the unorganized players. The adoption of this product bundling, that would be a key trigger for the companies going forward. However, capital allocation, that would be the most important variable here on, as most of the companies, they juggle between these different brand building as well as distribution setting businesses, as well as increasing their capacity or upgrading their technology. However, as a result of this, they expect earnings to remain muted for most of these players in the near term, but the larger players or the leader in this case, that should see a faster than expected re-rating, being efficient in terms of capital allocation.
Well, let's wait and watch. Brokerage after brokerage has come out with notes on this space. Let's see if any of these react. Thanks a lot for that, Yash, as well as Nikki. Avinash, want to take that conversation forward on telecom as well, and the likes of Bharti Airtel and Vodafone Idea. Now, Vodafone Idea giving their SOS to the government, Bharti Airtel or the promoter company looking to raise funds, which might see, well, we never know, but it might see the company becoming a foreign-owned entity as well, if indeed things fall as per what media reports have said. No official confirmations here. How do you view these two names now?
No, I think as far as Bharti Airtel is concerned, I think markets were anticipating this development, and I think eventually the markets would welcome this, because clearly in terms of the funding and in terms of the cash flow generation capacity, I think that would give a significant boost to Bharti Airtel, because obviously the collaborator would have a deeper pocket to actually spend aggressively in this telecom space. But as far as Vodafone is concerned, I think the markets have clearly realized that the managements have definitely sounded a caution, clearly because cash flows continue to be very weak, and I think I won't be surprised that despite the price increase, Vodafone may not gather that kind of momentum, because clearly I think in the next 3 to 6 months data is definitely going to be a price sensitive product. So it's not that companies could price data at any price point. So I think it's going to be a little vulnerable for Vodafone, and my sense is we could see continued weakness in Vodafone. Bharti Airtel, I wouldn't be surprised that markets could definitely take it in a positive light, and probably some further re-rating from these levels is possible.
What's your sense on some of these southern private banks, southern players? We just had the new listing, CSB Bank, then you have Federal Bank, which up until now has not managed to move out of the range of 85. It was trading at 100 plus at one point. City Union Bank, which has been doing fairly okay for itself, though it's been a little bit conservative in its approach to disbursements, and the management said that as well. And South Indian Bank and the others alike. Do you feel that these are some of the smaller names that one could focus on?
I think my guess is within the names, I think Federal Bank still continues to look attractive. I mean, if you look at the asset quality percentage and overall loan book growth, I think they do have definitely a kind of a strong footprint on the South market. I would not be surprised if South Indian Bank, which is a fairly inconsistent performer, markets are definitely not happy with this bank, considering that it's a very volatile kind of bank. As far as CSB is concerned, I would believe that valuations definitely are not cheap, and I think the way the stock has gone up, probably we could see a little bit of selling. And overall, I think these banks are in the news largely because there have been some talks that possibly going forward in the consolidation, these banks could be prime takeover candidates. So I would believe that typically somebody who wants to put a portfolio of these stocks has to take a longer term call. I think the larger frontline corporate banks are definitely well and better positioned compared to these smaller banks.
All right, and what a thunderous listing CSB Bank had. Post that, I think yesterday's Friday session saw the bank giving up about 8% in trade, so 274 for CSB. Ruchit Jain, technical analyst at Angel Broking, he's joining us right now on the show. Ruchit, very good morning to you. Friday's session saw us trade below some of the crucial shorter-term daily moving averages. Do you believe that we could probably have a comeback in today's session, maybe go long from these lows?
Yes, hi, very good morning to everyone. Well, definitely if we, at least till Friday morning, even we had a quite bullish view on the markets, and we believe that this minor correction which we had seen from 12,150 was just a part of an uptrend. Still, the broader trend continues to remain positive, but one of the developments that have been seen on the Nifty in Friday's session is that on 60 minutes charts, we have seen a formation of a head and shoulders pattern, which if formed after a decent rally, usually indicates probability of some correction or consolidation in short term. So this head and shoulders pattern which has been formed, this is indicating that in near term we should see some consolidation or a correction. Now the targets according to that pattern are coming around 11,750. And now to negate that pattern, the index has to move above 12,000 levels. Even if you look at some of the options data on Friday, then 12,000 call option attracted some fresh writing over there. So I think for today's trading session, 11,960, 11,980 would become a resistance. And unless we see again a movement above 12,000, I think index would see some consolidation and will not resume its uptrend quite soon. So we are not advising to create fresh longs now at current levels. We are advising just to stay on sideways and watch for next 1 or 2 trading sessions how the index behaves. Once index goes about 12,000, then we would again participate in the next leg of up move.
Okay, so wait it out a bit. May face a resistance around 11,980 according to Ruchit. So just being a bit more cautious this time. Let's talk about stocks then, Ruchit. What are you going to do with individual stocks?
So amongst the stock specific moment, I have one buy recommendation, one sell recommendation. Probably the sell recommendation is in REC. We have seen that after some consolidation, the stock prices have again formed a low top, low bottom on the daily chart, and the immediate support, which was around 131, 132, was breached comfortably on in Friday session. So this stock may see some more correction, and the previous lows, which were of October month, could be tested. So one can go short on REC futures, keeping stop loss above 135, expecting target around 120, and I'm long on one of the recent outperformers, which is Tata Elxsi. In the month of October, we have seen a very sharp up move in the stock with very good volumes. Prices then consolidated in the month of November, and in last week we have again seen the stock resuming its uptrend with good volume. So whenever the stock is moving higher, the volumes are going up, and whenever there is consolidation or minor corrections, the volumes are not that great. This is a positive sign and indicates that the long positions are still intact in the stock. So one can go long on Tata Elxsi on minor declines around 840, 835 range with stop loss below 795, expecting near-term target around 950.
Okay, we will watch out for these names as well. Just a follow-up, Ruchit, on a couple of stocks before we get in. Yash, for the Bloomberg indicator, and two names which are very, very weak and wobbly in Friday's session, RBL Bank as well as Dish TV. How do they look on the charts?
Both are looking quite weak, primarily RBL Bank, although recently we have seen a pullback move, but again on Friday session the stock has breached its 20 days exponential moving average, which was acting as a support in this pullback move. Also on Friday the volumes were good on when the prices was correcting, so I think today 350 would be the resistance for the stock, and in near term we could see the stock again heading lower towards 310, 305 kind of range.
Okay, and Dish?
Dish TV also, now the stock seemed to be in a consolidation phase, but although recently we had seen some very sharp up moves, but the stock has not yet formed any kind of high top, high bottom structure. And if you compare this stock within the other stocks from the media space, this has been one of the underperformers since last few months. So as of now, there are no signs that the stock has bottomed out. So I would tend to avoid taking any long trades over here also.
Okay. Stay on, gentlemen. We'll come back and bring in Ashish Chaturmohta as well, but onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're looking at PFC Limited, and we've seen a big fall in Friday's day of trade, and with that the trender indicator, which is a proprietary Bloomberg indicator, that has given a negative color change. Now the trender, as you know, uses basically the average true range for the purpose of generating a buy as well as a sell signal, and also helps you manage your stop loss. How do you interpret it? You go long when the trender line changes its color from green to red, and you go short when the trender changes its color from green to red. When does this color change take place? Whenever the price moves below a certain level. Now in the case of PFC, we've seen that the green line, which was the trender line, that was placed at the mark of about 110 or 111 close to, and it managed to close below that level. So it closed at the mark of around 110 in Friday's day of trade, which was a sharp fall of almost 4.5%, which was its biggest one-day loss in nearly 3 months for the counter. And with that, we are seeing this negative signal being triggered on the daily time frame. Additionally, we've seen weakness come in for a second consecutive week on the weekly charts as well. So if you take a look at how the weekly charts of PFC are looking, when it moved up from the levels of almost 90 to as high as 120, it met with that resistance of the 61.8% from its high of 139, and that's exactly where we got the reversal come in, and we have this confirmation after 2 successive weeks of weakness in the counter. The RSI2 giving a negative divergence, the trender indicator again giving a negative close, and the color change from green to red, that there is considerable amount of weakness in the counter. So watch out for PFC as one name that could be trading weak in today's day of trade as well as in the weeks ahead.
Okay, and how well has this worked in the past, Yash?
So Devina, 3 out of the last 5 times, with the 6th one being the one that is right now because of it getting triggered. We've seen the stock close as low as almost 6.5 to 7 odd percent once the trigger has given a negative call.
We'll watch out for that. Thanks a lot for that, Yash. So do watch out for PFC as well. I must admit that the PSUs have had some very divergent moves of late. Some sticky ones have done really well. The others have just kind of fallen by the wayside as well. Even a utility name like Power Grid, because of this pending corporate action on the demerger has largely been very, very iffy, 8% off over the last 3 months. So horses for courses, as they say. Let's get in Ashish Chaturmohta, Head of Technicals and Derivatives at Sanctum Wealth, joins us on the show as well. Ashish, good having you. Thanks for joining in. How are the derivative positions looking like, Ashish? Is there a trade on the Nifty or the Nifty Bank today?
Good morning, Neeraj. So I think, we have seen some cool off recently, but if you look at the data perspective, 11,800, there's a strong put writing taking place, and I think one should use this opportunity as a buy on dips kind of market. We are not very negative on the indices. We believe that after a strong uptick which we have witnessed in last 2 months time frame, this was bound to happen, that some kind of consolidation was possible. But I think at these levels, or maybe some more dip of around 40-50 points is opportunity to be on the long side of the trade. Keep 11,850 as in stop loss for going long, and we believe positionally 12,150 to 12,200 is on cards, and that's what our target at an index level is there. And we believe that the rally we are going to see a lot of these names like Reliance, or maybe from some positivity coming from even IT basket after some dip in last couple of few weeks is going to support this up move at an index level.
Okay, and so if that is indeed the call, that there might be some support from IT, which has actually done really well, and which means that you are largely bullish on the index over the near term. What are the stocks? Let's talk about two of your ideas. One of them is Kotak Bank, the other one is Divi's Lab. Why do you like these two names? Yeah,
so if you look at Divi's Lab, this is one stock which has been consolidating for last 8 months, and after 8 months of consolidation, we saw the stock crossing this 1800 mark as a resistance point. Now, due to general sell-off in the market, we have witnessed some profit booking in the stock, but that's not a meaningful dip which we have witnessed. So clearly, stock is consolidating near its all-time high after consolidating for last 8-9 months. So I think the data is clearly indicating that long accumulation is happening in last 3 weeks. If you look at even the OI positioning, so keeping it all together, I think 1770 should be the stop loss for going long in Divi's Lab. I think positionally stock is poised for a move towards 1860 to 1900 kind of zone in next couple of trading sessions. And even if you look at the structure of the entire pharma basket, a lot of these names, whether it is Dr. Reddy's, Divi's Lab, or even some of the beaten down names like Lupin, have started building some kind of base at lower levels. So I think Divi's Lab, being a stock which has outperformed the broader pharma basket, is continue to ride this trend. Second is Kotak Mahindra Bank. So if you look at even in a falling market for last 1 or 2 trading sessions, Kotak Mahindra is consistently making a higher top, higher bottom formation, and that too after consolidating for last 6, 7, 8 weeks. So that's a broader structure which Kotak Mahindra Bank is indicating that this stock is also going to hit its all-time high. I think 1645 should be the trading stop loss for going long here. On upside, 1725 is a short-term target one can expect in Kotak Mahindra Bank.
Okay, those are some stocks to watch out for. I remember we were talking about Kotak Mahindra Bank being the outlier in the banking pack, which has seen some decent amount of selling in the recent past. Stocks up at 1674. Let's talk a little bit more about the buzz once again in the sugar space, Avinash, and what's your whole taking on whether or not an investment is warranted here?
My guess is I think it's too early to guess whether the sugar cycle has now started an uptrend. But yes, there has been some selective buying in sugar counters in the previous week. Our sense is that we would still be more bullish on the ethanol players, especially something like a Balrampur Chini or a Dhampur, because our sense is that these companies obviously would get the added benefit of both businesses. So clearly, I think it would be too premature to actually enter these stocks at these levels. Clearly, this has not got reflected in numbers, and I don't think you could see this in the December quarter. Hopefully, if at all the sugar prices move up and we could see some improvements, we could see the Jan to March quarter definitely a better quarter. But overall, I think Dhampur and Balrampur Chini on dips could possibly be considered.
Okay. Keep in mind, the Uttar Pradesh government has left the state administered price, which is SAP, for sugarcane in the state of UP unchanged at about 315 rupees per 100 kilo bag or per quintal. And typically around these times, it's believed that what if the prices could be raised, though a lot of it is now the purview of the central government. But there's a fear, and that hasn't happened. Let's see if that puts some activity back into some of the sugar names in today's session, Devina. So that's the other one to watch out for. We are talking about banks looking extremely weak in Friday's session. Yes Bank and State Bank of India, both of them corrected quite strongly in the session in Friday's trade. Just wondering, would you, I mean, leave out Yes Bank, Ruchit, just a very quick word on State Bank of India. Will it find support at these levels?
So if you look at some medium to long term trend, then that broader trend still for the stock is positive, because recently within the PSU banking basket also we have seen that the leadership was taken in by SBI, and no, as of now there are no signs of reversal of the broader trend. Yes, in Friday's session we had seen same correction which could probably extend towards 310, and that is where the 200-day moving average as well as the 89 days exponential moving average is placed. So I would recommend taking a buy on dip strategy, not at current levels, but if it comes around 310 around its 200 DMA, then those would ideally be good levels to again enter into the stock.
Okay, that's SBI for you at 320, had nudged highs at 350, from there it's come off. Avinash, do you buy Polycab?
My guess is, I think, Devina, if you look at the longer term kind of business metrics, they should definitely do well. But yes, the stock has significantly moved up from almost 700, 750 odd levels. So I think in the near term it could consolidate. But yes, in the near term we are quite positive on the numbers, and our sense is that possibly FY21 could be a lot better. They have definitely a diversified product mix, and within the players like KE and other players, definitely I would believe that somebody who's looking at a 2-year kind of horizon could possibly look at buying the stock for the long term.
Ashish, there are not too much in terms of data points from a technical standpoint, but just the ferocity with which it's gone up. Do you feel that there could be more profit taking on this counter?
So Devina, in fact, this stock we had recommended as our Diwali pick at $650, and our target was 1,050, which has been hit recently. I think the broad trend is very promising, although it's a new listing. But even within the new listing, you see some kind of pattern formation, and the pattern was that after coming with an IPO, the stock corrected to almost 570, 560, and then there was a reversal. And after that, we have seen a very meaningful volumes coming into the stock, and even the delivery volumes have been picked up. I think the broad play, although is because I've been tracking the stock very closely, it's a FMEG play, and that's where I think the stock is getting re-rating. 1100 is what I'm expecting, at least in a shorter term time frame. 970 should be the trading stop loss.
All right, watch out for Polycab then. We've got just a few seconds left to go for market pre-open, so let's stick to that. Asia's pocket is more mixed bag, and Nifty opens slightly negative, about 1/3% following through from Friday's session. Sensex trades with gains of closer to 0.8%. Individual stocks, and that's where the focus lies right now, and not on the index. We'll come back to the index in a few minutes. Z continues to reel under pressure, 4.5% lower for Z. That stock's now at 250. You've got the likes of Bharti Infratel, which is trading under today. Axis Bank, Nestle are looking weak. Reliance Industries, no contribution there. That's down about 1/3. Then you've got the likes of a BPCL, ITC, HDFC, ICICI Bank are all trading under, but marginal cuts. The biggest losses are coming into Bharti Infratel, 7.5% now. In terms of the gains, UPL has moved up to 572, 1.8% higher. Maruti back above 7,000. Hero MotoCorp, Britannia, Tata Motors, Sun Pharma, some of your bigger gainers. More green on this screen than red, so that's a positive takeaway, at least from the start of the trading session. The currency doesn't do much. 71.24 to the dollar is where it's trading at.
Just a couple of stocks. I wonder if Dish TV is reacting and RBL Bank is reacting. You should bring those two up on the screen. Dish TV, another 10%, maybe the initial down tick, that is. Let's see if it stays that way. And RBL Bank, which corrected about 7% in Friday's session. Let's see, no further cuts out there. And then there are some individual names which are moving around, the likes of Laurus Labs, Zealand, etc. We'll revisit some of those once the pre-open rates settle down. On the gaining side, looks like J. Kumar Infra may start off well. Looks like BF Utilities may start off well, but these are early days. Let's give them a chance to stabilize, and then we will talk more about these names. But there are, before we talk about some large caps which are in news, we want to talk about Axis Bank and whether Avinash believes that Jairam Sridharan leaving would have some impact or no. And we'll talk about all of that. But first, let's get in Somit Sarkar, who joins in with the top brokerage calls for the morning. Somit.
Good morning, Neeraj. And the big brokerage calls for the day, first we have is Morgan Stanley on financials. Now, the brokerage is expecting the next calendar year, that is 2020, to be fairly weak for the financial sector. Now, for banks and NBFCs, they're saying that they will struggle to improve the balance sheet and profitability. And they're also expecting the loan growth to be slow in 2020, and NPL formations will be elevated according to the brokerage. Now, ICICI Bank and HDFC Bank are the top picks for Morgan Stanley, and they are underweight on Yes Bank, RBL, IDFC First Bank, Federal Bank and government banks other than SBI. And on the NBFC side, they are underweight on Indiabulls Housing Finance and PNB Housing Finance. The second one is on SpiceJet, where Edelweiss has maintained its buy rating with a target price of 160 rupees. Now with Indigo troubled by issues in the Pratt & Whitney engines, according to the brokerage, SpiceJet is in a sweet spot to capitalize on the opportunistic vacuum. Now as Indigo has cut its capacity growth guidance to 22 to 23%, the brokerage is expecting the yields to expand due to this supply moderation. Along with this, the return of 737 MAX will help SpiceJet expand its capacity and become more cost competitive to Indigo. Lastly, it is expecting SpiceJet to win substantial market share from Indigo going forward.
Okay, we will watch out for these names as well today. Sumit, thanks so much for putting that into perspective. Actually, Avinash, coming on this, the aviation stocks, and wonder if SpiceJet at 107, 108 deserves a relook from an investment perspective.
No, I think
the valuations, that is.
No, I think looking at the problems which Indigo is facing, Neeraj, I would believe that clearly operating metrics for SpiceJet definitely look much better than Indigo, and our sense is that the stock has corrected quite significantly. So hopefully if they have a pretty good handle on the crude price and the raw materials, I would believe that looking at the kind of commentary Indigo management has given, at least for the next 1 or 2 quarters, they are expecting growth to slow down due to several issues bogging the company. So I think SpiceJet could possibly be looked upon as a much better bet compared to Indigo, and I think if somebody wants to take a play, this could definitely be a better bet compared to Indigo, at least in the near term.
We will watch out for these names. Thanks a lot for that, Avinash. Just a follow-up on that is on the 2 stocks in news, and one of them at least is Axis Bank, the third major exit.
Yeah.
The stock has been a rank underperformer compared to what an ICICI Bank has done, maybe with reason to. Does it give you a better risk-reward from an investment perspective compared to some of the others in the arena?
No, I think, Neeraj, in the near term, there could be a little bit of uncertainty on this exit, considering that this is a third big exit, and I think the markets could possibly like to know that in future going forward, these kind of exits don't happen. Our sense is that the stock, if it possibly corrects significantly and goes below even 700 odd levels, could be a decent kind of investment bet, considering that these issues may not bog down the longer term kind of story for Axis Bank. I think within the corporate banking space, I would not be surprised that the third and the fourth quarter could be equally strong. And I think considering the kind of money they raised from the QIP, their capital funding has been pretty strong, and hopefully asset quality is now going to be stable. So I think on dips, definitely Axis Bank should be accumulated, but in the near term, this kind of news flow could have a negative impact on the stock, at least for the near term.
All right, and like Neeraj said, it's been an underperformer. And on the other hand, the outperformer has been an ICICI Bank, which brings me to the trading aspect of it. Ruchit, would you trade ICICI Bank after a 30% rally in the last 3 months?
Yes, within the private sector banking space, this has been one of the outperformers, and as of now, there are no signs of reversal of this uptrend. So I think yes, if one has to look, then any kind of minor dips around 510, 515 range could be again a good opportunity to again enter fresh longs, keeping a stop loss below 495.
Okay, that is on ICICI Bank. Inox Leisure also has, you've got a new target price by CLSA. 450 is the new target price for Inox Leisure. Trades at about 368, had gone up to 380 from where it started to correct a few months ago, went down to about 360 odd, but it's just about 370 now. Avinash, would you be a buyer in Inox?
I think longer term, in fact, Devina, this multiplex space is definitely going to grow. I think we wouldn't be seeing a lot of players in this space. Our sense is that, considering the kind of geographic footprint which they have, Inox definitely looks better positioned compared to a PVR. And I think in terms of valuations, if you look at PVR, I would not be surprised that there could be some sort of, valuation discomfort there, considering that it's, fairly richly priced. As far as Inox is concerned, I would believe that longer term, considering the fact that it's a key player within South and Western India, definitely I think on any dips, a longer term kind of positioning is definitely very well, positioned for Inox. So on dips, one should definitely, accumulate this stock.
We will watch out for these names as well in the session today. Inox Leisure is an interesting one, and Dana, I wonder if their commentary thus far compared to the peers has been different. I mean, there are 2 listed pockets, but Inox quite there. They've also unveiled some loyalty program. They're doing a few things right.
Yeah, and they're going big on getting these new experiences on board and trying to make sure that they get as much footfall in their premium showcases as well, not just the regular theaters that they have. So they're pushing for that. They're opening screens at a pretty healthy pace. They're on track to meet their target screens. I think they put out a target of 800 screens for the next 3 to 4 years. I think they're well on track to doing that as well, according to the management. So, I mean, so far, I mean, much of the rally that we've already seen in Inox has come about. It had actually flatlined for the last a month or so, more than a month. It has just about flatlined. From there, it's, I think, just about garnering some steam again.
But this year has been pretty fantastic for Inox Leisure, about 49%. Let's see if there is more in store today. Okay, the other one which is in focus today at the end of the pre-open session, I think the news flow around Maruti is positive. Remember that. Maruti Suzuki is seeing some upticks. The production has risen about 4 months in the month of November, right? The first time after 9 months of cuts. Now, is this a telltale sign that things might improve? Avinash, would you read like that into it?
No, I think hopefully, I think, after 9 months, the management has raised production. Neeraj definitely is a very, very healthy sign. And our sense is that, the Jan to March quarter could be significantly better than the first 9 months of this fiscal year. And I would not be surprised that hopefully, once the domestic market recovery starts, Maruti, which has been beaten down quite badly, could possibly be one of those stocks which could bounce back pretty sharply. So I think even at these levels, if one were to take a call, even for the next 6 to 12 months, this definitely looks to be an attractive bet. I would not be surprised that apart from December, maybe December is a slightly weaker month, the Jan to February numbers could be much better than what the street expects.
And Avinash, very quickly though, 2 calls, Maruti Suzuki on the charts as well as Ashok Leyland. There is a query for that. Yeah, Ashish, sorry. 2 quick calls here.
Yeah. So I think Neeraj, Maruti looks promising. It's on the lower end of the range, and I think 6950, 6940 itself is going to act as an important support area. There can be a good bounce from current levels, at least extending towards 7150, 7200 zone.
Okay, and Ashok Leyland?
Ashok Leyland, I would say it's more into a sideways trend, and still we are looking for some more confirmations. I think 81 is an important resistance point for Ashok Leyland. Once we see a decisive break above 81, then only I think some momentum will start building into the stock.
Then it'll be interesting to see, because when we chatted with Maruti Suzuki the other day, Mr. Srivastava, he was saying that the next 12 months will see more profitable growth. Because the margins will move up, and whatever the volume growth maybe is one thing, but the quantum of profits and the margins that they make on all of those will be better than the preceding 12 months. So he was sounding very optimistic.
Also, so
will increase from January, yeah.
I mean, so that probably will also aid in a way to make sure that they get there. But we're just minutes away from market opening. Let me tell you all that you need to know to stay ahead in trade today. Axis Bank sees its third major exit in a year with the exit of CFO Jairam Sridharan.
Maruti Suzuki's production in November rises 4%, marking a turn of fortunes after 9 months of cuts.
OMCs will be in focus today after OPEC and its allies agreed to deeper production cuts starting January 1st next year.
Bloomberg News reports that Radhakishan Damani has appointed bankers to sell another 5% stake in Avenue Supermarts. This is in order to meet the minimum public float requirements.
Equitas Small Finance Bank has approved its issue of shares to IIFL High Conviction Fund and Trivantage Capital at 52.7 rupees per share.
And lastly, Morgan Stanley expects a weak 2020 for India's financial sector. It expects balance sheet improvement and profitability to be a struggle. However, the ideas don't change. ICICI Bank and HDFC Bank, I think, are the top 2 ideas from the Morgan Stanley stable. So that may not change too much.
I think it's with the small finance banks, it's also important to get in a sense of what lies ahead for Ujjivan and Equitas with their issuances, and how an investor can probably play these two right now, Avinash. Do you feel that, because while Ujjivan Small Finance Bank got the kind of response it did get, you still have the listed entity there and the pricing differential. How would you play that?
No, I think most of the action, Devina, would be in the smaller finance banks, and I think the holding company obviously technically should trade at a discount. We could see a very good bumper listing from Ujjivan Small Finance in the coming week, but I think overall the holding company structure could mean that the parent company could obviously trade at a discount, and I think markets have also given it a big thumbs up. So obviously, looking at the kind of appetite from both the retail as well as institutional investors, I would not be surprised that these holding companies could not be moving up quite significantly, but the small finance banks are definitely going to be a space which is going to be hogging the limelight.
Okay. Well, Maruti is the only one which is looking like making a move upwards. The others aren't quite really putting their hands up. And Vodafone Idea, by the way, languishes a little bit, which puts Bharti Airtel in an interesting position in the session today. Omax, after going down 20% in Friday's session, looks like starting off okay today, up about 4%. Though be mindful of this stock. You don't quite know which way it will turn up given day, as is J Kumar Infra. But not too many other gainers which are really looking like doing very, very well. Ashish, Chaturmohta, your third idea is PI Industries. Tell us why you like it.
So I think in the agrochemical space, PI Industries is one stock which is consistently making higher top, higher bottom formation, strong delivery volumes. Here I think the stock has a potential to see at least 100-120 rupees uptick from current levels. I think one should keep 1450 as a trading stop loss for an upside target of 1620, 1630 area.
Okay. We're just a minute away rather from market opening. So let's get you the top trading calls for the day. We were locked in at 11,939 at the end of pre-open. Ashish, what's your top call of the day?
I'll stick with Divi's Lab because I think that is very strong trend. 16, as I mentioned, 1770 would be my trading stop loss. 1860 should be the short-term target.
All right, 1860 on Divi's Lab. Ruchit, what's going to be your top call?
Buy recommendation in Kolpal would be also be recommended today. After some retracement, we have seen some positive momentum on Friday, which could get carried on today as well. So go long on Kolpal with stop loss below 1450 for target around 1550.
Ruchit, very quick, 20-second perspective on Nifty Bank starting of week today. What do you do here?
So if any kind of minor pullback comes around 31,400, then I think one should take that as an opportunity to go short for intraday, keeping stop loss above 31,650 and expect some retracement of 38.2% of the recent rally, which was 31,050.
Wow. Okay, go short on any forms of retracement is Ruchit's top call. Okay, gentlemen, all of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time this morning. But here's how the markets are starting off today. Very flattish and shouldn't surprise anybody, the pre-open session, because that's what largely the Asian screen was doing as well. Maybe some more upticks than what the Indian screen has, but flattish moves for the Nifty 50 on open. 8 points in the green. Sensex about 30 points in the green, 0.8%. The Nifty Bank very, very flat, just about 0.17% lower. I doubt that the mid caps and the small caps would be doing anything materially different. So should be a flattish move. Yes, indeed, 0.12% and 0.14% for the Nifty mid cap and the BSE small cap indices. So that's the nature of the start in the session today. Let's get the heat map up. More green than red. That is interesting. But lo behold, Bharti Infra starts off lower today. And why doesn't it surprise me? The pattern out here in Bharti Infra off late has been very, very interesting. Axis Bank corrects about 1%, maybe on the back of the CFO resignation. It's come off quite a bit from those highs of 755 odd. GAIL is down about 0.5%, BPCL down about 0.5%. So those are a few losers in the session today, but Bharti Infra is the only one which is right up there, followed by Axis Bank. What is doing well? Z about 1.5% higher after the gain losses in Friday's session. Maruti Suzuki fundamentally up about 1.5%. Production cuts end after 9 months. 9 months of production cuts, and now there's a bit of growth in production for the month of November gone by. Let's see if it gains further. Eicher Motors has some gains. Hero Motocorp has some gains. So autos showing that little bit of spark in the session today. Nothing too dramatic, but showing that little bit of spark in the session today. Do watch out for some of these names. But even Stevens, as far as the market breadth goes, we're just hanging on by a thin thread to the gains for the Nifty and the Sensex, not so much for the Nifty Bank. Bring up a couple of pockets that I want to highlight before I hand it over to Devina. Firstly, the two stocks in focus, which is Dish TV and RBL Bank. Dish TV rises in the session today. So, well, buy the rumor, sell the news, or rather sell the rumor and then cover your positions. Maybe that's the case as far as Dish TV goes. So went up down 15% in Friday's session. In today's trade, up about 7%. RBL Bank, though, continues to remain slightly negative in the session today as well. And then a few stocks from the consumption bucket which were active in Friday's session. SL Propack up another 1.5%. Colgate Palmolive marginally higher in trade, and Berger Paints is now at 507, up about 1.5%. All of these were up and about in Friday's session, about a couple of percentage points apiece, and start off well in today's session too. Devina, what are you spotting?
Well, for one, Dish TV has moved up too, so now it's up about 7% after the massive sell-off that we saw over the last week. Stocks now, I think, at 9.5. BF Utilities is up as well, around 10 odd percent for BF Utilities. Friday's session was one of the top gainers on the Nifty 500, and that the buying has continued through into today's session too. Omax continues 19% on Friday, another 6.5% today, so that's looking strong. Magma FinCorp saw a day in the red on Friday, profit taking on the stock after seeing a climb over the last 1 week. Stocks back in the green today. Adani Transmission at 326, and you've got the likes of an SL Propack, which Neeraj already spoke about, VA Tech Vabag, that's up about 1.5%. Berger Paints, Shrey Infra, EID Parry is doing okay for itself, Welspun Corp is doing okay for itself. Zensor Technologies is the other one that's holding up in today's session, and Info Edge, that's up closer to 1% right now. Dish TV is now up 11.5%. What's losing is Vodafone Idea down 10%. The likes of an Indiabulls Ventures is down 4%. You've got Divan Housing, which is down 4%. MMTC loses a bit, was the top gainer in Friday's session in the broadest market space. Today is down 4%. JK Tyre, Indiabulls Real Estate, Future Consumer, Prestigious Stays are some of the other losers in the session this morning. Pretty flat in terms of the advanced decline ratio as well. The breadth of the market is extremely, there's no major queue actually. It's pretty even keel out there. 592 stocks advance, 555 stocks decline. All right, Gautam Trivedi, managing partner at Nepean Capital, is joining us right now on the show. Gautam, thanks very much for taking out the time. Let's talk about the market mood right now. And
Sure.
much anticipated.
Pleasure to be here.
Much anticipated, rebound, pullback rather, after the record highs that we've recently seen. Should one get too perturbed?
I think the liquidity that you've seen that's come in, especially in the last 6 months, it's the sole reason the market's actually been going up. So the current performance of the market is completely devoid of the ground fundamentals, as we all know. And I think the most startling and striking evidence of that is the fact that the RBI's own semi-annual monetary policy report, which basically has, I think, some scary numbers. So, for example, they've said that the first half of FY19, we saw a total credit in the system, total money supply into the commercial sector, which includes everything literally, banking, bank funding, NBFCs, ECBs, QIPs, IPOs. So all of that put together was about 7,34,000 crores. That's again for FY19, the first 6 months. For the first 6 months of this year, i.e. FY20, that number is down a whopping 88% to 91,000 crores. So that clearly tells you that we have an economic situation which needs to be corrected. And the market, of course, seems to be completely ignoring a lot of these numbers, even if you say the market is future looking. But still, I think it defies gravity the way the market's been behaving.
Yes, it does. Gautam, good morning. So the question is, fundamentally, is the market looking
Morning.
6 months out, and are you looking that far out and trying to allocate money? The finance minister or the government is on a bit of a market appeasing spree of sorts, and if indeed this personal tax cut comes in, that could give one more leg too.
You know, I think the personal tax increase in the first place itself was unnecessary, and in fact, I think has had a major negative impact, because on one hand, you're looking at the government looking forward to private sector capex, but the very same people, and I assume a lot of those are going to be in the 5 crores plus net taxable income bracket, if you're going to tax them at a rate which is, as high as 42.7%, frankly, what is the incentive for a entrepreneur who's in that league to actually put in more capex? So I think that has to be reduced as soon as possible, frankly. And I think lower taxes will actually help spur the economy at a broader level, and I don't mean simply at the investment level, also at the consumption level. So yes, the government should do that. That's long overdue. Question is, when are they going to do that? There was a lot of chatter it would happen around or before Diwali, but it hasn't happened for whatever reason.
Do you then believe that this consumption slowdown that we're talking about, if there is more money in the hands of the consumer, at least for essential items and FMCG goods, this could be, something that could see a significant upturn in terms of their numbers and volumes?
Yes, but let's hold back on that, because I think most of the FMCG companies are seeing a slowdown in the rural area, in spite of the fact that we had a pretty decent monsoon. So I think you will see more pressure on their margins. Of course, a lot of the high valuations have come off in the last month or so. But the fact is, I think that sector is still struggling, even though globally these are among the most expensive valuations for the FMCG companies.
It is. Okay, Gautam, want to talk about a few pockets. I mean, automobiles, themes that you like, companies that you like as well. Let's start off with automobiles because they are in focus. Now, we don't know how much would this tax cuts for automobiles, but Maruti, we were talking to the management the other day and they sounded very optimistic about more profitable growth over the next 12 than the previous 12. We've seen that production numbers moving up for the month gone by as well after a 9-month cut. How do you think the setup is for two-wheelers, for the space at large? How does it all move?
Yeah, that's a good question, because I think what we saw between the year 2001 and 2013, we saw, for example, in the passenger car segment, we saw a compounded annual growth rate in terms of volume sales of 13%, 1-3. However, from 2004 to 2019, i.e. over the last 5.5 years or so, we've seen that compounded annual growth come down to only a mere 6%. So there clearly is an issue and a problem. I think, on the tax front and the GST front, I don't think a lot of people actually know this, but there are actually 6 slabs within the auto space. And also the constant back and forth within different ministries commenting on what should be done with respect to GST for the automobile sector has left consumers confused as to what really to do. So I think there are issues which are obviously very significant. The CV space has been particularly hurt. Ashok Leyland just announced some more production cuts for the month of December. Though I think intrinsically it's a great story, but and everything's good at a price. But the fact is, if you're still in the month of December, in the current month, going in for production cuts, it clearly tells you all is not well on the CV front. Specifically on passenger cars, the month of October was the best month specifically year to date, because you had the twin festivals of Dussehra and Diwali together. And usually and historically the month after Diwali has been a weak month, but November surprisingly wasn't as bad. So I think there are some green shoots. You've also seen cars like the MG Hector, which obviously has done extremely well. So there are certain pockets which seem to be doing better. The bigger issue with the automobile sector, besides just GST and the confusion around it, is the fact that the lack or the limited availability of financing. So even when I speak to NBFCs or banks who have been very active in the automobile financing space, have said that they've significantly retrenched. So the number of rejects for automobile loan applications has now, I believe, hit as high as 25%, which wasn't the case a few years earlier. So I think financing is, again, a very important element of the automobile financing, automobile sales. And as a result, if that doesn't improve, I don't think you'll see that improve anytime soon.
Right. Gautam, while your point is well taken on the rest of the pack, we had Muthoot Capital joining us just a few days ago talking about two-wheeler financing. And he said that they're actually doing okay with regards to growth. And for the two-wheeler space, the dynamics are pretty different from what passenger vehicles or CVs or the others are. It's more of a necessity at times for people to travel from point A to point B. So not more of a luxury, but more of a necessity. In that sense, do you feel that two-wheelers as a pocket will likely do much better?
It should do better because it's a lower ticket item. So I would think that should clearly do better. And as you said, if indeed the financing is a lot better and NBFCs like Muthoot are willing to indeed fund the two-wheeler space versus the passenger car or the CV space, then I guess that should be positive news for the two-wheeler industry.
Gautam, just wondering, with regards to automobiles, or maybe we can segue into others as well, I would guess that buying into a space right now should be a factor of whether earnings growth and what is the print on earnings can be predicted for the next 2 or 3 years. Do you get that comfort in auto right now, the predictability of what the earnings could be? And if not, where are the pockets or where are the themes where you believe there seems to be certain predictable growth?
Yeah, I think I think I must add one more interesting data point, which I learned from one of the auto dealers, and they said that the used cars as a multiple of new car sales used to be around 3 years ago. It used to be about 0.8. Now it's 1.3. So clearly customers are more interested in buying used cars versus buying new cars. But having said all of this, my personal view is that we're still about 12 months away from seeing a significant revival in the auto sector. So we've actually stayed away from we're obviously a mid and small cap fund, so we don't invest in the large caps, but we've stayed away from the auto anch companies and for a very specific reason. And also the ones that are export oriented, even those, of course, there's a global auto slowdown as well, so it's not limited only to India. Though I personally believe that a lot of the problems that we're seeing in the automobile sector in India are very local and created in India versus being impacted by the global auto slowdown.
Gautam, where is it that you currently seek value in terms of even individual stocks and not just sectors?
Yeah, that's a good question. I think what the market is fed up of, and again, this is evident right across where you've seen large caps become mid caps and certain large caps that have become small caps or even micro caps. I think that the market is fed up with poor corporate governance, high debt, and where you've seen so much negative press around companies blowing up, banks blowing up, certain promoters fleeing the country and not traceable. So I think in the midst of this, the market has gravitated, and I can even use the word polarized, towards good corporate governance or good companies with good ownerships. So let's take, for example, you've seen Spandana Spurti, okay? Good company otherwise, but now that you've got Kedara owning as much as 49%, Kedara Capital is one of India's largest homegrown private equity funds. And that stock has done phenomenally well. Similarly, one of the stocks that we own is Avas Financiers. And in the case of Avas, Kedara and Partners Group collectively own 58%. So as a result of that, what we've noticed is that the flight to quality, and Avas has been a huge beneficiary of that, when you know that the owners are private equity funds, and hence as a result, the perception is, which I'm sure it really is that the level of corporate governance, the leakages, if they were happening in the past, I don't mean specifically on Avas, but I mean in general about companies, those will be either eliminated or significantly reduced. So as a result, I think people are gravitating towards companies that are well run, and hence you've seen a huge run up in valuations for a lot of the blue chip names in India.
Okay, that's an interesting way of approach. Now, so we might see this, Gautam, in pockets which are maybe slightly small or maybe bordering on fintech or technology based. I mean, PE interest. I don't know if you think otherwise, but just wondering. So when one fans out the larger market landscape, would you be largely looking at such companies, or are there some earnings backed steady performers that you're willing to put fresh money to work right now?
If I can answer that, but I forgot to mention a couple of other stocks which have seen that sort of significant change. So let's say, for example, SL Propack. Blackstone now owns 75% of the company. I think SL was a well-run company anyway, but the fact is a lot of investors in the past few months have now started to look at SL and see what Blackstone, which is probably now the world's biggest private equity fund, is going to do with SL. So that's one example. The second being Z, where the underlying business, of course, has been impacted by the economic slowdown. But nonetheless, you've seen the fact that the company got a major D-rating when the promoter pledge issue came out. Now with the promoters down to less than 5%, and Oppenheimer being the single largest shareholder, a lot of confidence is coming back into the stock. More importantly, there will be a strategic partner that will come in at some point, as I read in the press, to take a significant stake as well. So given all of that, again, that's another stock that has either hit a bottom, or the market is now starting to wake up to where this could be 3 to 5 years from now, given that the promoter pledge issues are mostly out of the way. The other stock that we actually ended up acquiring, which in our portfolio, is Nippon India AMC, which of course ran up a lot also on the back of HDFC AMC's valuations, but more importantly, with the change in promoter and Nippon now owning 75%. So again, these are examples of where, not limited, as you said, to only financials, but like SL being a good case in point, where we've seen that re-rating starting to come in with the change in ownership.
Interesting. Just a follow-up there, Gautam. If you are at liberty and willing to talk about it, SL Propack, and you were rightly saying, I mean, it was classified as a Subhash Chandra Group stock. It wasn't. It was a very, different entity owned by the brother, which is no connection, well-run entity, now a Blackstone company. Is the theory that Blackstone having these multiple global partners and SL being the world leader in packaging would actually now find more foot in the door into a lot of other global peers? It's a proven performer, and therefore never mind the valuations, the growth in business at a global level would now accelerate?
I think that's a logical conclusion, and I would assume that's the very reason that Blackstone made that investment and bought as much as 75%. So I suspect, we haven't done that much work on the company as yet, but I suspect that is exactly what a Blackstone would or should do, given their global reach and the fact that they are present in so many countries, including other emerging markets.
Mm-hmm. Okay, Gautam, one follow-up and one final question from my end, and that's on the Indian retail space. And the reason I bring it up is because of a technical conversation around how Radhakishan Damani, in order to reduce stake, because to meet the mandatory requirement, might come out and sell some stake. The company might start off as well, some fundraising. My question is, should market participants or would portfolio managers like you look at these valuations in isolation that they are high, or would it be prudent to look at the entire space and see that it's not just DMart which is at abnormally high valuations? Companies like Trent are not cheap either. Some of the other well-proven retailers across the world have never traded cheap. So maybe these companies by nature would continue to trade at higher valuations.
I think you raise a very, very important question, and I keep getting asked this question regularly, especially by foreign investors, as to why is HDFC Bank at 5x or 4.5x FY21 price to book, or for that matter, one of our investing companies, Avas, is at 7 times price to book. So I think this is not isolated only specifically to one or two companies, but it's across the board where you see valuations in India significantly higher, not just versus their Western peers, as in the US or European peers, but also with respect to other emerging markets. And my answer to that really is the fact that Indian investors who are domestic Indian citizens do not invest overseas, even though they can remit under the LRS scheme up to $250,000 per family member, and essentially they can invest in global markets. That hasn't still taken off. So given that situation, I think Indian investors continue to bid up good quality names, and those valuations will indeed remain high for the longest time. Will they correct and then again go back up again? That's very much possible. Again, I'm generalizing, but a stock having a high valuation is not a reason not to invest in it, at least from our fund's perspective.
Okay. Gautam, great to hear from you this morning and get your thoughts on all of those individual stocks as well. Thank you so much for joining us this morning.
Thank you. Thank you for having me here.
All right, and the markets are absolutely flat currently, 11,911 on the Nifty, with the Nifty Bank just down about 0.25%. But moving on, the Automotive Component Manufacturers Association of India, or ACMA, has seen a 10% decline in its top line for the first half of the current financial year. Nishant Sharma spoke to Deepak Jain, the president of ACMA, on the association's future plans as well as a demand of GST rationalization from the government. Listen in.
I think the concern for us is basically that the component industry is made of basically 3 buckets. We have the domestic, we have the aftermarket, we have the export. Obviously a 10% degrowth is not desirable, but this is actually the outcome of this industry. The 15% domestic degrowth kind of mirror images what the industry performance of our customers have been. Maybe some few silver linings have probably been on the aftermarket. We have still had a stable aftermarket and we have grown about 4% in the aftermarket, as well as in the export. If you look at it, we're still a net importer, but the deficit has actually reduced from a $1.7 billion to $900 million vis-a-vis H1 last year to H1 this year. So that way export has also grown about 2.5%. So overall, this is the industry structure. But I think the concern is the pain still continues. We had the opportunity and we were growing at a very robust pace over the last 3 years or so. Of course, it's a cyclical trend as well. But there is a concern for going forward and how basically it pans out.
Right. So how are the things looking out? The data was from April to September. How have been the months of the festive months of October, November, and how the upcoming months going to be?
So we feel that we should be able to do better in H2 than H1. So there are, and the reason I'll tell you what, there are two ways to look at it. Number one, if I compare it from last year to this year, you have to understand that the degrowth or the slowdown started from H2 of last year. So when I will compare H2 results, which are already muted of last year, to H2 this year, you will see a reduction in the growth, maybe deficit, right? That's one. Number two, just on saying Q4 or Q3, we feel that the festive season, although there was a kind of a degrowth as an overall quarter, but there has been a lot of retail corrections by a lot of companies, given the fact that BS6 is around the corner. We feel that Q4 will see almost all launches of BS6 vehicles. And we feel that for the component industry, the demand by the OEMs given for Q4 would be a little bit better. Reason being that they would be launching vehicles and also probably filling in their pipeline of retail on the Q4. However, we all know that 1st April 2020, we have basically BS6 coming in. With that, obviously, the pricing will have much more impact on this. India is already a very price-sensitive market. And if the financing doesn't basically improve, then you will see probably adverse impact on Q1. Right. So this is actually our, at least I would say, Q4 and Q1's outlook.
What are the key demands from governments at this point of time? What can it do to, bring back this? We have seen a number of initiatives from the government, announcement of the government. What more do you expect?
I think one of the long-standing demands from the government, from the component side, has been that please, if you could just rationalize the GST structure. We have two tariff lines, 28% and 18%, almost 40% of our components are actually still attracting 28%, which is a higher duty. We are manufacturers as throughput, so from the government point of view, there's not going to be loss of revenue if it actually reduces from 28 to 18%. The little bit loss of revenue would be in aftermarket. But the aftermarket needs that support because this would actually help us to actually reduce the spuriosity, which is going, because that 10% differential is quite a bit. And this will help us reduce the spuriosity into the aftermarket channel. Reducing spuriosity means that you also give your customers better, genuine quality parts and also safer products. So this would actually overall improve the performance of the industry.
All right, and coming up next, we talk about the real estate sector with one of the biggest developers. Abhishek Lodha of Lodha Group will be joining us. Stay tuned.